Welcome everybody to the third and final webinar in our series on building the bank of the future, aimed at helping mutual banks deliver more competitive and personalised products and better financial outcomes for their customers. I'd like to begin today by acknowledging the traditional owners of Naarm, Melbourne, the lands on which we meet today, and the Wurundjeri people of the Kulin Nation. Pay my respects to elders past and present. Thank you for joining us today. In this session, we're going to take a deeper look at lending as a key part of mutual banks' propositions and how they can look to build the bank of the future. Just a few reminders before we get into it. Questions can be asked any time throughout the session by using the Q&A function in Zoom. We've allocated time at the end of the panel to answer as many questions as we can. The session is also being recorded, and so will be made available to you shortly following the webinar for you to be able to pass on to colleagues and friends. Before we get to it, I'm sure it's going to be a fascinating panel. I'd just like to take a couple of minutes to provide some context to these discussions today. As I said, lending is core to any bank's customer proposition, and it's a thing that we've heard emerge through this series time and again. Whether that's been about digitising the lending experience, how various data sets are enhancing lending, or even whether trust plays a part in the consumer lending journey. At Frollo, we have said for a while now that as far as open banking goes, 2023 is definitely going to be a year that was heavily about the lending use case. That's certainly in train for us, with both big banks and mutuals launching open banking driven lending use cases this year. And that's happening across mortgages, credit cards and personal loans. Open banking and lending should be about how better data and a more secure and transparent customer experience can help deliver value for mutual banks. And we believe that value is the time saved for loan approval, a better quality of lending that can be delivered, and ultimately what counts for all of us, happier customers. So what's more important than what we believe, though, is what our panellists believe, and we'll move to the panel very shortly. We're just going to have a look at a quick video, and then we'll come back for the panel discussion. Open banking brings for the first time the opportunity for mutuals to see their members' full financial life.
We believe that open banking, or open data as I prefer to call it, is a significant revolutionary change since digital banking was introduced many years ago.
Helping our practices made up of advisors and brokers deliver a great client experience.
And it's a great example of the power of open banking data as well. It's able to deliver them all the benefits of being able to see a 360-degree view of their members' financial life.
We now have frameworks, applications, the tools, the AI and machine learning algorithms to deliver pretty much any use case using open banking data.
That can help our customers, be it debt reduction, save up for their first car, save for their overseas trip, and really give them a tool to help them get there faster. We're also seeing opportunities in the lending space, and there'll be many others that will present themselves.
Additional service that a practice can deliver to customers to build future customers is really important value that we're delivering as well.
We found in selecting Frollo that they not only brought the products that we needed in terms of launching an open banking use case or offering, but rather also they brought knowledge, skill and advice with helping our open banking strategy and where we wanted to get to.
In particular, helping practices drive efficiency through access to high quality information in a timely manner. And it also assists them in enhancing their client experience as well.
It also has a benefit for mutuals and an opportunity for them to create products that speak directly to members' full financial needs.
Open banking will allow mutuals to build even more personalised offerings to their customers.
So I think mutuals really should think about the opportunities in open banking in two ways. How are you unique to your membership today as a mutual bank? And how is open banking going to help you deliver that unique value that you deliver for your members? How can it kind of supercharge that value, if you like?
I believe with where open banking is up to now, that you can start building the bank of the future centred around data and customer experience.
Welcome back, everybody. For those paying attention during that video, yes, this is my favourite jacket. I'm wearing it again. Let's meet our panel for today's discussion. Linda Craven is Chief Digital Information Officer at Defence Bank. Welcome, Linda.
Thank you.
Darren Boddington is the Principal at Futura Consulting and the former Chief Digital Information Officer at Credit Union SA.
Thank you.
To bring a bit of a broader perspective on lending, we have Tony Khan. In the end, Tony is our Chief Customer Officer at NextGen, which is Australia's leading technology solution for the mortgage and lending industry. Welcome, Tony. And just to make my life a little bit trickier, we have a second Tony, Tony Thrassis, the CEO of Frollo, affectionately known as TT. Welcome, TT. Let's get into some questions, folks. Tony Khan, I might start with you. Just to give us a bit more of a broader sense of lending, can you tell me a little bit about how you see the important challenges in collecting financial data in lending and the lending journey?
It's actually a really big question I've been unpacked for quite a while. Look, I think there's different strata levels, I think, in the ecosystem that it's important to. One is lenders, doing the credit and assessment function. And then it's really important to the loan originator, whether it's a broker, person in a branch, person in a call centre. And then, of course, central to it all is the customer or the applicants. I think from a lender's perspective, one of the key opportunities to introduce the challenges to overcome is around really driving higher straight-through processing rates, or STP as we call it, because MIRs are costly. And if you look at the cost of processing loans across all financial institutions in Australia, you're probably looking circa about $5 billion per annum in cost base. And so being able to drive that down through better STP is really, really critical. I think another important thing with data used for loan assessment is getting comfortable around the provenance of that data and having trust in that data as well. And also having, obviously, a secure ecosystem that it's being collected in. So all really key things. I think from a loan originator's point of view, they're very much the same, but I think the trust factor takes a new dynamic in that. It puts a whole new different paint job on things, and really being able to have that trust with the customer about it being, I'm not sharing internet banking details. I know this is a regulated framework and it works really, really well. And I think going down to the customer, that's the key thing too. Now, there's obviously a lot of education and change management as part of that, but they're all very scalable challenges.
Yeah, fantastic. Well, I might pick up on trust, because that really has, as I said in I think comments, it's really emerged as a theme throughout this, and it's obviously key for mutuals. So for Linda and Darren, is it important? Is it as important in lending? It's obviously a key part of how mutuals see themselves in the market. Is it an important part of the lending process, or is that more just an event-driven piece and you're looking for build trust in other areas?
So I think it's absolutely critical particularly for lending. The lending is where you do tend to have the most conversations with our members and customers. So it's absolutely critical. We actually did some research last year on open banking, and it was more centred around the personal financial management application of information and gathering information. And our research showed that the second highest barrier to people taking up the open banking process was the trust factor.
Right.
And we found when we explained, so our researcher explained the process for gathering information through the open banking mechanism, that the trust factor went up significantly. But there was also a age difference. So our older members were more inclined to want to continue to providing information through documents and mechanism that they had control of. The younger members were much more amenable to taking up the digital acceptance process through open banking and allowing that information to be provided digitally.
Yep.
Then there was also a slightly gender difference as well. So females were less trusting and the males were slightly more trusting. So that was an interesting factor that came through with the research, yeah.
Yeah,
Very interesting.
might just add that,
Yeah, please.
lending, to me is underpinned by trust. You're providing a lot of personal, sensitive information, and that needs to be secure and trusted. And it's an opportunity then, and I think, Linda, you brought on key points there of adjusting that trust, that personalisation of trust, which is a good insight. But it's an opportunity then to build out advocacy for the brand, underpinned by trust, and then that can then further extend the brand opportunities.
Yeah, interesting. And TT, I think it's worth bringing you in here as well, just on that same basis. How do you see open banking kind of fitting into that process? We talk about security and reliability and those kind of things.
Look, just starting with security, perhaps there's technical explanations. That's not where the fun part is, let's say, or whether it's important. But the CDR is secure. It's far more secure than screen scraping. It's based off API and OpenID Connect. And once things are in place, it works well. Mind you, not every data holder or bank has got it right first go, but once it's there, it works well. And I think then what comes down to being important after that is, and what we focus on is how are your use cases enabled through open banking? What is the reliability part? Because it's one thing to say the banks are online 95% of the time. You can retrieve data X amount of time, but that's not what makes things reliable. And particularly in lending, what makes a reliable use case is being able to not only get the data, but when you can't get the data, know that you haven't got the data, know that you still need to collect the data from the bank before you hand it over to, the brokers or the people that require it, and for them to know that, they've got all the data. And that's what makes it reliable, just knowing that whether it's a joint account or not joint account. And so what we do is build in mechanisms for that. If retrieval of data, fails, then we'll try it again, and eventually put it into a back off queue kind of thing. But just getting that data and knowing that you have all the data that you require, that's what creates reliability in a lending use case.
Yeah, thanks very much. So, Linda and Darren, again, maybe just give us a little bit more on what are the challenges that mutuals have in lending. Obviously, getting good data in. Linda, you mentioned, appealing to different demographics in different ways is important. Are there any other significant challenges in lending that mutual banks address?
I think it's pretty standard across the community, and there's just so much data that needs to be provided to actually assess a loan, and that can be really confusing for the applicant and frustrating. And if there's any delays, then trying to secure your dream home just takes that little bit longer. So, as I mentioned before, it's very emotive. So there's certainly opportunities there to look at what can be done to STP or to straight through process, the lending data gathering and processing to actually provide an exceptional member experience, especially during a home purchase.
Yeah, that's something that has come up, being able to marry that the great customer service aspect with the digital tools.
Yeah, so it's absolutely, you're right. It's a member experience, but it's also the efficiencies for our team to be able to get that information in a usable form. Because we allow people to give it to us in any form. It can be a physical document, it can be a PDF, a scanned document, an XLS, a CSV. So we're getting data in the various formats at the moment. And so for our teams to be able to get the bits of information out of that they need is where the time-consuming bit is. If we can standardise it, it's a lot better.
Yeah.
The other key point is the security of the information. And, our customers and our members are not really that cognizant of sending us information that we actually don't want. Please redact your PII and your PCI DSS data that we, so there's an education piece as well. And when that data comes into us, we've got extra effort to take that data out of the information that we receive from members. I guess they're our key challenges.
Yeah. I mean, there are other data sources. We've spoken about open banking, but things like screen scraping. For mutual banks, does that play a part in how you think about it, Darren?
Yeah, certainly screen scraping's there. Certainly being used widely across the community. But the key challenge, though, with that is to do screen scraping, you've got to share your credentials and click on a link.
Yeah.
And generally, we say don't do that. So it's a bit of an anti-pattern. Bit of mixed messages that we're giving to our members. The other thing that's interesting is probably a bit of a watch this space, but ASIC at the moment are supportive, maybe that's not the right word, but they're okay with screen scraping.
Right, yeah.
But I think that's going to change.
Yeah.
So it's a matter of being prepared for when ASIC's position changes in regards to screen scraping as well.
Yeah, for sure. TT, maybe you have some, I know you've been talking to regulatory bodies about that.
Yeah, there is the ACCC and Treasury particularly who are making up the rules around, the consumer data right. They're actually starting soon enough a consultation on screen scraping and the removal of screen scraping from at least the banking system, not saying remove it from other areas, but certainly where the banking system is involved. But, part of the difference between screen scraping and open banking is, whilst open banking, you can't compare it for security because it's just far more secure. The other piece, I think, is how you build in that collection of data into the things like you talk about, Linda, because you can create the documents, the bank statements, the things you need, and have, if you require, have things redacted or have things not present. So you can create those from the data that we talk about as being securely collected. So that data can be happening. I think the other thing, and what would be interesting maybe for Tony to comment on from what we've seen is, with straight-through processing, you might get 20% straight up that could go through and fly through and there's not much in it. But then you get the next batch that requires backwards and forwards for the broker. Information's not there or information's wrong and now you get it. And the thing about the difference between screen scraping and having somebody upload things, do something, download and upload it is, CDR is real time. So you could go and get that piece of missing information straight away and add it to the flow. So it all comes down to how you engineer the flow. And I think this is partly what I've seen, at least what NextGen are doing, is engineering the flow that is real time and can collect the things you need depending on where you are, whether it's fact finding or the bits that you need along the way, so that it's not just the 20% straight through that are simple things. It's the rest of it that can save you time and money.
Yeah, I think, Tony, it's a really good point. And if you compare it to, obviously, traditionally you can manually collect documents and that's still, very prevalent. If you look at something like a screen scraping, we can talk around the security aspect of it. But I think the bigger benefit through CDR is all around currency and provenance. So as you say, you can actually accept a deal as a lender and say, well, this data is relevant up to today. I'm not looking at a statement going, oh, that was 3 weeks old. I need another one. And I think the provenance is really important because you will see a lot of, using the broker channel as an example, there's lots of brokers who are very good at, positioning, screen scraping and collecting the data that way. And that's prior to even choosing a lender. And it can be very helpful in getting an assessment, looking best interest duties and then determining what lender they're going to use. But that data is useless to the lender. With CDR, you can actually deliver an application and say, hey, there's provenance to this data. This was the ADR that, had the consent. They had a trusted advisor consent. This is the currency and the date and time of it. It's yours. And that provenance is really, really important, really critical, I think.
Well, it's important to trust. I mean, we talked about trust before, and it's one thing around consumers not understanding or have not been educated, obviously, on the consumer data right, but trust comes about not only through understanding, but through that interaction and what you're asking of people and what they're getting out of it and seeing what they save.
Yeah, delivering that value proposition.
Yeah.
Tony Khan, I might stick with you. So NextGen are providing an open banking powered solution to the broker channel through Finsure and Connective. Relatively early days, I believe, but are there any insights you can share, and we can have the other panelists?
Yeah, there's been quite a few, and it's actually across 4 major broker groups, so there's now brokers currently being able to use that.
Yep.
And we are doing it in a phased approach. As Linda touched on, the trust, I think, in making people comfortable is the really important test to learn in early days. And the really encouraging thing is we're seeing brokers in that rollout who are getting very good at driving the advocacy of CDR and using it in almost every circumstance already. Now, of course, they're a subset. They're not, I'd love to say it's great and everyone's adopted it overnight. It's been like a French Revolution. But these things do take time, and change management's really, really important. I mean, we saw things such as having digital supporting document checklists and uploading documents took 5 to 6 years to really get into the market and become the norm. I don't think CDR will take that long, but getting it right in that learning is really, really important. So learning around how brokers are doing that's really critical, and then forming collateral and education around that. I think the other thing which we it's probably different, didn't really anticipate is, again, the trust. When brokers understand and can position it properly with the customer, it is a much better solution than the screen scraping. And also importantly too, it comes at a zero cost. There's no cost for those services in practice as well. As I mentioned, they're learning very quickly that currency and the ability to have provenance throughout the ecosystem is really important as well. But I think perhaps the biggest learn that we had, and we talk around the lending process around, well, what's the application, assessment and approval process, is that we've seen the appetite for it be far beyond that. And we really, really opened your eyes as to how important the lending journey is. And, that can start with someone going to a broker or to someone in a branch or calling a bank. It doesn't really matter what channel it is. But where it can be evident that that person's not really fit for finance, you don't have the savings, you don't have a high enough net disposable income, ratio surplus there to a loan. And in the past, that's often a conversation like, we'll come back in 6 months. And this is where not necessarily just a consent process, but the power of having personal finance management assets to be able to have to someone use this app. It'll empower you, in the budgeting and savings and planning tools in there are really critical. And, simple examples would be, this is the savings plan you need to do for 3 or 6 months. You can do that, you will be fit to get fit for finance. The other part of that journey, which is really, really eye-opening, has been, well, what's the post-settlement of it as well? And, I think there's plenty of players in the market saying, well, this is great, we can look at refinancing opportunities, etc. But I think that we've seen the real attractiveness to many brokers has actually been managing people. The current sort of example of that is the mortgage cliff customers that they have. Going, you are going to your loan is going to expire your fixed rate in 3 months' time. Your payments are going to double or triple. I suggest, use the app, use the PFM, download it and look at where your expenses are. And, there's lots of great feedback we're getting from saying, well, people don't realise how much they're spending on Uber Eats, or how much they're spending on ride shares, and how much they're just, gambling, etc. Or how much, their other lifestyle costs may be. And that's been an unexpected real victory. And I think that's a really valuable tool. So, the journey starts getting fit for finance, the applications, there's so many efficiencies, but the ongoing management for looking after customers is quite phenomenal.
Yeah. Interested to hear how that resonates for yourself, Darren and Linda, in the mutual sector. You do pride yourself on being close to your customers. That ability to kind of take a bit more of an extended journey, is that something you do today, or is it something that you?
Certainly something that we're wanting to do, and I totally agree with that. It's all about, in my view, making banking easier. It shouldn't be hard, and sometimes it can be difficult when you've got accounts at different FIs, different types of loans and the like. But if you can see that all together, and then have a plan to move forward, and obviously find wealth through best practices or improved practices, then that's a great outcome, definitely.
Yeah, I agree, and I think the gold in it is being able to give people a holistic view of their financial position across multiple financial institutions, and be able to provide some insights and triggers based on that information. until we get some really useful use cases for our members that are useful for them and effective for them, open banking, I think, and the use of that data is just going to be on a slow burn until that comes through.
Yeah. Yeah, TT, maybe you want to comment here, because we've spoken about insights a little bit through this series. It's come out, and being able to deliver small insights that can provide real value to the customers.
Yeah, I mean, there's so much in this, but one of the things we did learn or find in our second webinar, when we were talking about two things actually, talking about money management and how it applies to lending, and a little bit about those things that you glean from features of money management and our financial passport, which gives you a view of your income and your expenses and your assets and your liabilities. That's all useful information to help people not only with their loan in that straight through processing, but also generally, I guess, to understand where things are going and where things are coming in, where they're not. But some of the insights that, one of the things we did learn was around mutuals being able to provide those insights to their customers. Equally, we can provide those insights to the customers directly, but what is the value, and I guess what's your view of the value of providing insights, if you like, to the staff of mutual banks so they can have that conversation with the customers instead of just delivering to the customers? And there's many insights. The one that we talked about was bonus savers accounts and not actually achieving your bonus interest because you can make that fourth payment or that fourth saving, and so you'll miss out. So kind of timely providing that to people. But that's just one example. There's millions of insights that you could be providing. So, but what would be the benefit of those insights for staff to provide their customers as opposed directly for customers to understand themselves, or both? I'm assuming both is good, but yeah, what would be?
I think it becomes really important and really useful in the edge cases. So Tony's spoken about straight-through processing, and straight-through processing can be done when you've got some clear boundaries and clear risk appetite policies that you can set up your straight-through processing to go through or to adhere to. But that may work for 20%, 30% of your applications, and you potentially miss out on a lot. So where the insights come in is those edge cases where people applications don't qualify for straight-through processing, and you can then start to apply some of those insights to the ones that are just miss out. And why are they just missing out? It's because this insight is telling us the reason why. So I think that's where it'll become.
It's a really interesting point, and you're dead right. There's straight through processing is interesting, and there's I'm always sort of amused by the talk of the 7.5 minute mortgage capability. It's like, great, if you want to chase people, then you can approve in 7.5 minutes. You'll get rate chases will be gone in 6 months' time. Overall, we see straight-through processing rates in the market in mortgages at around a 20-23%, generally speaking. And you're right, there's still, you still look at 7-8% of the mortgage market is construction, 3-4% guarantees as company loans, etc. But within that, where you may have not necessarily a straight-through loan, but how much you can automate the assessment process is really about not necessarily cutting down the absolute number of STPs, but cutting down the cost and the speed to do those. And a great example is something like liabilities and assets and just the verification of them.
Yeah.
And being able to receive an application now as a lender and going, well, I've got a verification that all the liabilities in this application and all the assets, including the ID, they all match via CDR, so I can put them in a different stream and I don't need someone to look at them. And that's, I think, a really, really important driver in efficiency as well.
Yeah. I want to talk a little bit about risk and compliance now. For everybody, it's a huge part of lending. It's something that consumers don't see, obviously, but I think for those of us in the industry, we know that how you work through risk and compliance within the bank it has an impact on how you can process. Also has an impact on what new technologies that you can bring into the process. AI is very hot topic at the moment, and obviously we use it for open banking and some of the tools that we generate. But we're really interested to get your take on what are the challenges that risk and compliance pose to the lending process, or challenges or opportunities.
Yeah, I mean, I suppose we've got responsible lending that came in I think 08 or 07. Sorry, before then. But yeah, you need to make sure that whatever you're providing to the member is not unsuitable for them. So, and as part of that, you need to do quite a detailed assessment of what their data is, to make sure the member's a good risk, for want of better terms, the securities within your profile, and also again that the product is not unsuitable. So the whole lending process, you think about trust, is certainly underpinned by risk and compliance. But in my view, risk and compliance should be an enabler for the lending process. So it's around how can we, within that framework, provide great member experiences? How can we automate that? How can we simplify that so we can actually focus more on the conversation with the applicant, rather than focus on the data gathering and the checking and everything else like that. So it's a matter of leveraging, in my view, risk and compliance as an enabler to then drive automation, simplification, underpinned by providing great member experiences. And in linking back to what Linda said before, staff experiences before, because if the staff has a good experience, then the member does as well.
Yeah, it's kind of sometimes treading a narrow path between making sure that you're doing the best for the customer and making sure that you're also staying within the lines.
Yeah, so look, I think part of the challenge us mutuals have got with risk and compliance is keeping up with all of the changes in the compliance framework. So that's number one. But when you do, it's then trying to make that invisible to the member actually. So you want to try and you need to make sure that you're compliant with it, but you don't necessarily want that to impact the member experience and the customer experience. So, and it's also there is a certain level of interpretation that it's open to, and big banks tend to interpret their risk and compliance obligations a little bit less rigorously than maybe us mutuals do, and maybe us mutuals have something to learn from that.
Right.
But yeah, and so I think they're the biggest challenges.
Yeah, that's right. I mean, TC from the other side of the fence, in you're working obviously with all the banks trying to get loans through the origination to approval process. Risk and compliance, is that coming?
Oh yeah, absolutely. It's pretty critical and has been for many, many years. I think that, again, CDR has a very big role to play in that.
Yep.
Obviously through, what we've already discussed, just through security, provenance, and being able to have that trust in that data and know that it's not, that it's tamper-proof as well. I think, though, it's important too, around the distraction, I'd say about, it's not about, I think, having the aim to just completely digitise the process. I think as many people are interested in a fully digitised home loan as they are buying a home online and never ever looking at the thing. And it was interesting, it's actually the Connective Broking Group a while ago did research, which was really interesting too. And that was that the biggest factor to a consumer wasn't about speed of approval. I mean, although consistency and reasonable times is important, and it wasn't around interest rate, it was actually around education and the navigation of what they were doing, explaining, well, what are the different loan types, what are the different product types, what are the different plans I should have, should I be having an offset account, and those sorts of things as well too. And I think they're really, really important factors to be considering. Again, and then I tie that back into the compliance and the best interest duty is a really critical part.
Yeah, I'll totally support that. You've got to make sure you set up a lending journey that's underpinned by quality and the member, which we've talked about before. But there's certain stages along that journey that there should be what we call a human touch at certain moments of truth, just to connect with the member, to make sure they're okay, again, building the trust in the process and then building the advocacy that comes from that.
100%.
Absolutely.
Yeah, and TT, just following on from that, obviously we use things like AI, and we're trying to help banks digitise a part of it. for us, how do you see that we can help with better quality decisions or faster ones with the tools that we can provide?
Yeah, I guess we do a few things now. And one of the use cases that, and even that we've done with NextGen, is the ability to check what people are declaring.
Yeah.
So if we're then looking and obtaining and looking through people's transactions, finding what income that they have, working out through AI that it is in fact regular income. And there, believe it or not, there are over 80 types of income that we've found. But, PAYG, your pay income, making sure that that's, the biggest one to start with, and then all the other forms of other income. When people declare their income, you can actually validate and say, hey, your income really looks like this, or even on the expenses side, you forgot to tell us that it's, you still have HEX fees or something else. So just validating what people, that's the first step. First step is it's almost like an assisted form of, in that flow, you're assisting the collection of information, you're validating what it is, and one day you might get to the full STP if that's a thing that, there is no need to validate what people are telling you. It's all calculated. But, where we are today, even just that assistance in validation is, steps forward in responsible lending.
Yeah. And that's the most time-consuming part of the assessment process for our staff as well. So the more AI can assist in that, the better, and the more efficient we can be.
Well, particularly if you look to the flows of mortgages in the market, they peaked last month at 58% of all mortgage flows of refinances. And, in the vast majority of cases of those, they are generally dollar for dollar. For most people, they're fortunate enough to be under 80% if they've been running that loan for a few years. And again, a huge proportion of them are PAYG. So that's sort of, even just that straight through processing on those, where you're not taking extra cash out and making reasonable inquiries, it actually adds up to a fair chunk of, you're getting up to sort of 30-35% of flows in that category pretty easily.
Yeah, we forget about, the ROI of a good lending journey is in focusing on the customer, very, very definitely, but there's definitely some huge benefits you can get in the back office that things like AI can help deliver.
Yeah.
Well, that's been a great discussion. I think we're going to move to some questions now, and let me consult my document here and pull them up. So these are from the audience. So here are the questions. To the panel, mutual banks have a strong customer focus. How can they use open banking to help customers get lending ready? I've covered some of this, but anyone want to add any additional comments there?
Yeah, I think Tony mentioned it before. It's really about helping our members get insights into where their spending is going, and what their saving rate is like. Also helping them. We've been looking at some potential products in terms of credit fit, and showing, allowing members to understand their creditworthiness and their credit score and how all that fits into the lending process.
Yeah, this might sorry, Darren, might tie in. Linda, you mentioned there's another question here which says customers are used to emailing documents and have been told for years that they shouldn't use screen scraping. How do you go about building trust in open banking? Was that actually a more secure and privacy-friendly way of sharing data? I think you sort of touched on that before.
Yeah. So, our view is that open banking is a much more secure way of doing it. And I know screen scrapers have gone to great lengths to make sure that the whole ecosystem is secure, and I trust that they've done that. But the biggest principle is what Darren mentioned, is that we, not only us banks, but the ACCC are starting to educate people about, please don't click on links, don't give your credentials away. And that's the first thing that screen scraping asks you to do is click on this link and give us your banking login ID.
Yeah.
I think there's a role there for the bank to educate the applicant to say, look, this is a new thing, this open banking, it's safer, and this is how it's going to look. making sure that those journeys are really centred around the user experience and user design, so it's as simple as possible. So it ties into what Tony was mentioning before with the broker network. There's also I think a role here to play by the HLC or Treasury to educate the community around open banking, CDR, and the security around it. And I would see that once that's done, I know it's on the roadmap, they've spoken about that quite a bit, but once that's done, then that should actually increase the trust and the usage of open banking.
Yeah, great. There's one here, TT, that I think is probably best for you, and sounds like it's coming from Mutual Bank, but is the process to get accredited and use open banking different for banks that are already data holders?
It's not different for banks that are already data holders. It's different from anyone else because there is a streamlined flow for an ADI or a bank, and that really does cut down the effort and the work. There's really little effort, and the elapsed time might be 3, 4, 5 weeks, but that's an elapsed time. The work effort is because ADI is already regulated by APRA, they already have all their security controls in place, so they don't have to go through that whole journey.
Yep. Right. There's a good one here. What are your views on using open banking post settlement? So we sort of touched on this with a broader lending journey or a longer lending journey, if you like. Let's say, what are your views on using open banking post settlement to proactively identify customers who could get into financial trouble, not able to pay back their loan, and help them? Linda, have you on that one?
Yeah, so I can certainly see the use case for it.
Yeah.
So Defence Bank is not using open banking data as yet, but it is in the future plans. But absolutely, there would be a use case for that.
Yeah.
So I totally agree with that. Probably, you apply for a loan and you say, this is what I'm going to adjust my expenditure to be. I'm going to reduce the Uber Eats or whatever it may be. You think about the Wagoo and Shiraz case. You could actually put in place a monitoring process for the first 6 months and give the applicant a thumbs up. Well done. You're on track. You're doing really well. And then encourage that good behaviour.
Yeah, it's great sort of after sales service.
And that's with the member at heart.
Yeah.
So it'll be bolognese and Chianti soon.
That's right.
Exactly. We've got time for a couple more. So what do you expect as the biggest innovations in the lending process in the next few years? Maybe TC, you want to build this one first up?
Yeah, look, I think it's a really interesting question, and Linda touched on this. I think where we see a lot of innovation is actually in policy of banks, and whether that's good innovation or bad, I won't comment, but you could almost see there's potentially corners being cut in a lot of cases, and that can help drive a lot of volume. If your loan meets these criteria, we're just going to do it, and we don't want to see certain information. I'm not sure if that's, I'm not saying, well, it is innovative, but innovative is not always good necessarily. Look, I think in the big challenge across the board is really is making not the leap of faith, but making the investment decision and not necessarily needing to be a technology leader, but don't leave it too late. I think one of the challenges we talk around the ecosystem of being when you're fit for finance to doing a loan and actually be on an ongoing basis, utilising things such as CDR. I think really developing where great innovation comes from is having a integrated solution across that entire lifetime. So it's one thing to have CDR data and access to it, but being able to use that throughout the process of any one lender, but more broadly across the industry as well. Actually utilising that data better is where it's going to be, where the real innovation is going to come. Look, we've got an eagle-eye view of it, and know that as soon as next month, lenders will start consuming it as part of the lending process.
Yep.
And again, that will take a while to ramp up. It won't be revolutionary overnight, but that's I think fair to say 2 to 3 years is going to become more of a standard approach than an education.
Yeah, Chris from PNN mentioned a no regrets investment when he was talking about getting into open banking and getting started on that type of thing. Sorry, go ahead.
Oh, it's just going to be provocative and say the biggest area of innovation I think needs to be in the government sector.
Right.
So the lending application process is just, you know, a small component of it. While it's a you know, huge part of it, but it's not the be all. We've still got the settlement process, and we've still got states that won't, you know, still need a wet signature, that don't take an electronic signature. So we need the innovation, we need the government departments to catch up with the AI and the digital capability that we've got in order to make that process a lot better for the members and the customers.
Yeah. There's one here actually, which I think ties into that a little bit, which is, and it did come up in the second webinar that we did, which is how can mutuals uniquely benefit from an open banking lending use case compared to, for example, the big four banks? So it's this comparison of, is there anything that's unique about what mutuals can do versus how the big four banks can use open banking data?
It's an interesting one.
Yeah, it is an interesting one. I think for us it'll be being able to utilise the insights a lot more effectively. So we don't use brokers, so we have that relationship with our members directly. And so for us we can provide that very personal service. So if we've got those insights, that we can then provide that personal service to the prospective loan applicant, then I think that will be the game changer. And I don't think the big banks are going to have the capacity in their staffing to be able to do that. Yeah. And I think that's where we'll have the edge.
Totally agree with that. And that comes back to that staffing insights that I think, Tony, you were talking about before, and getting people finance fit. So if you apply and you're referred and you don't quite get there, then mutual banking, we've got the member at the heart of what we can do. We can work with that applicant to help them become fit for when they're ready to come back and apply for the loan.
Yeah, I agree.
Yeah, and I think there's some great, leadership we're seeing in the mutual market, investing in that area. As I know, for example, you guys have done some great work with the likes of PNN Bank and Beyond Bank, and those tools are out there already, and it's a great foundation to be building on.
Mm.
Yeah, there was a question here actually that ties into that, which is, do you have any other examples of banks, lenders or brokers who are using open banking for lending today, and how are they going? I mean, you've given us some about Connective and Finsure. It's probably a little bit too early for us in our journey, TT, to talk about the banks we're going to be working with this year, but we're starting
in terms of what you were saying, Linda, was getting closer, that's your mandate, right? Being close to your, to your members, consumers, customers, and then thinking, because you're not brokers, let's say, or we don't make use of brokers widely, that what the broker does is try and stay close to their customer.
Yes.
What Tony talked about is how they can do that, because they have this information. It might come from CDR, but it's this information that you can get and they can use with the tools that we have in terms of money management and insights, and insights are just part of that. And so, for you guys, if you have that same capability, then you can do and can compete with or offer that type of information that, brokers do have. Even personally, I've, mostly borrowed direct with banks and not gone through brokers, except for the last time I kind of, encouraged my son actually to go through a broker. And what I found was interesting that they went through a broker who basically said, look, once this is done, this refinance, if in 12 months' time the loan that you have drops its interest rate, we can actually go in and give you the new interest rate. And I thought, wow, no bank's ever done that for me before either,
I think that you'll see too, though, we talk a lot about the brokers being early adapters there, but where we also see it is the proprietary channel lending in mortgages, which is moving pretty quickly. Even, a really simple case, again, we never probably anticipated much, was a very large lender realising how long when they engage directly with the customer, how long it takes them to go and get statements compiled, 6 to 7 days. Mate, just turn that into 10 minutes with open banking. It's it's only one use case, but it's a pretty valuable one, and it's a step we're seeing.
Well, I had another experience with a major bank digital channel, and the person that was involved left that organisation, and the loan just sat there. All the information just sat there. Nobody picked it up. It went like you needed to call them up week after week after week to get somebody to actually now pick it up and go forward. And by the time they did, they wanted all the information all over again. Terrible customer experience.
I've got a question. This has actually come from me for Linda and Darren, but everyone can weigh into it, which is really about the evolution of CDR. So, I know you're both aware that open energy is here more or less, but still coming. And the other data sets that have been contemplated, are they something that you think will be of interest and use to mutual banks, both in lending and perhaps other use cases as well?
Yeah, absolutely. I think it's certainly an interesting area, and it will just help promote CDR and open banking and the usage of data and sharing data in that secure way. So I think there's a double benefit there. We'll certainly be interested in that. Certainly looked at different energy fintechs before, and also then having the benefit around the promotion and the same journeys that sit across, or similar journeys that sit across the data sharing in open banking will be similar to energy, which makes it easier from a consumer perspective as well.
Yeah, I think that'll be the biggest step change, will be the level of understanding of the consumer then around CDR in general, and then have a lot more confidence in the open banking regime because it's part of CDR.
Yeah.
And, but then you've also got, when open finance comes in, we've got the ability then to bring that into the holistic financial view for our members, and provide that so much more comprehensively than just banking. We've certainly had discussions with some banks about that might specialise in things like solar panel lending, for instance, and the ability to bring energy data in alongside open banking data and make something, get some extra value from it there. TT, your view on the progression as we look forward? CDR?
Well, the open finance, obviously the first non-bank lenders is now this year, let's say. It's imminent in terms of getting the rules out and following that through. Things were paused in terms of super and general insurance and telco, but and I guess then we've got right access that will come and allow us to even open up a bank account, and even move money between one bank and another. So that will it reminds me, actually, I've got to reply to a few things, but that's another kind of exciting piece to get there. So while we're all kind of stabilising, and I think putting our effort into innovation of what is already there, which is needed, and that education, then there are things to come, no doubt. But in this phase, it is all about imagining, because as I said earlier, it's real-time access to data that you can get at any point along the flow or use case that you're creating. And that's completely different to a screen scraping exercise, not only just because of security, just access. And that's how do you do digitisation? You need access to data. And so, what could be better through APIs?
Absolutely.
Yeah, well, thanks very much. So we've got a couple of minutes left, and that wraps up our panel discussion. So thank you very much, Darren, Linda, Tony, and Tony for that. I think that was a great discussion. It's really good to see the same themes through all of our webinars pop out. Things like trust that are really important to mutuals, the level of service that you can provide, and how we can get digital tools in the hands of mutuals to help them continue to provide that great level of service. So that's been really great to see that kind of emerge as a theme over the 3 different sessions that we've had. I want to thank you everyone online. Thanks for your time. Very valuable, and we hope that you've found it valuable as well, and beneficial. As I said earlier, the copy of the webinar will be, the webinar recording will be available shortly. Please also check out the Mutuals Content Hub on building the bank of the future with open data. There's some great resources and tools there. as well as the recordings of these sessions. There's a stack of other tools which we provided to help mutuals build their open banking business case. And we're also, further to that, offering one-on-one workshops for mutuals who are interested in understanding more about how they can help build that internal business case and get started. So reach out, get in touch, and we'll put together those workshops for you. Finally, we hope you found this valuable. Follow's been working with customer-owned banks since before the launch of CDR in 2020. We love the values alignment with the sector that we have here at Follow, as we're a purpose-driven company as well. And we're delighted to continue helping mutuals make a positive impact on the industry and their customers. So thank you very much, everybody. Thanks for your time.